The larger companies lose share to smaller companies. The little ones are going up because they haven't had the luxury or the curse of having so much money. When you have so much money, you spend it everywhere. You build up capacity, you build up retail, you build up product portfolios. You're basically competing everywhere and not competing anywhere well. When you're smaller and you have less capital and less talent, you tend to be way better in terms of putting all your eggs in one or two baskets because you don't have a lot of eggs to begin with. You become much better at what you're doing. So paradoxically, in a lot of industries, big is healthier and big is more stable and big is more profitable. In cannabis, according to my research, that's not the case. In many cases, it flips. So those 5, 10, 20, $30 million companies that I see are often the healthiest, the smartest, and there are companies that people are throwing capital at, but they're not taking it for obvious reasons. Number two is focus. Pick a lane, either by product or by region or by corporate strategy, and go deep into it. Because the big players, they're like Germany in World War II. They're fighting on every front. With dedicated, passionate management in the right team who knows how to execute, that $20 million company can be a $50 million company in a year.
Hey, everybody. Welcome back to another episode of the Cannabis Accounting Podcast. Today I have with me Mitch Osak, the founder and president of Quanta Consulting, a cannabis strategy and consulting agency. It's served over 200 companies on multiple different engagements. But for those who don't know you, Mitch, if you want to introduce yourself and just let people know how you found your way into the cannabis industry.
Great. Thank you, Ray. And I appreciate you having me on the podcast. So good day, everyone. Mitch Osak. I've been in the cannabis industry since 2016. I'm based in Toronto, Canada. So I had a front row seat to Canadian adult use legalization. And I've seen that rise and accelerate and then crash and now back on another rise. But my work has taken me all around the globe as cannabis jurisdictions have been legalized around the world and production has opened up in every continent on our fair planet. I got into cannabis serendipitously. I was working at a time for Grant Thornton. They're a large accounting firm around the world, and I was running their strategy practice. And there was a project to bid on, at the time, a Canadian Medical Cannabis Association that represented 31 licensed producers. And they needed some work on consumer research, market research, and scenario planning, because our prime minister had publicly announced at the time that he was thinking about legalizing adult use cannabis. So I jumped at the opportunity to do this project. I did it. I ended up working very closely with a large number of publicly held Canadian LPs, which include Aurora, Kronos, Hydropothecary, which is now Hexo, and so on and so forth. So that was the beachhead by which I got my first start in the legal industry. And from that organization, I've worked with over 220 cannabis clients around the world. My own personal connection to cannabis is twofold. I grew up in a middle-class suburban Toronto cannabis community. Family members grew weed, sold weed, and we all listened to Rush and had a great time. But I've also had many friends suffering from MS, epilepsy, and cancer rely on cannabis to alleviate their symptoms and help them as far as their wellness journey. So I'm very pleased to have jumped into the sector. It's had its ups and downs, but I think all the signals point to a vibrant and healthy industry going forward.
Nice. I appreciate that breakdown of kind of your background. And it is interesting. I always say it's rare that industry gets created during one's career. Last thing I can think of is like the internet didn't exist, then it was created, tech, e-commerce, all these downstream businesses and industries using that technology happened. And I'm like, okay, I was a little too young for that, but cannabis, we're in the prime of this weird, explosion that's happening. Not explosion, but definitely that changing of the guard. So what I found interesting about your background is, biasly, or you come from Procter & Gamble, one of the more larger multinationals, and then did that, and then also went out on your own, started your own business, built that up. And so just thinking through back when you were working for P&G, I remember thinking that I worked for a large Fortune 100 multinational, like I have made it. Like similar to you, my family listened to Rush, really blue collar dairy farmers. I'm like, dude, you're a finance person for a large company. Just do this forever. But then I, wanted to go out on my own. So thinking back to those early days when you could have just continued your career in corporate, what made you want to start your own business or at least kind of try to go out on your own, seeing how kind of the sausage was made, so to speak, early on in your career?
Yeah, it's a great question. I was very fortunate to join P&G Brand Management right out of my MBA school, and it was one of the greatest professional experiences of my life. I really got to learn at the feet of the actual company that invented brand management almost 100 years ago. So not only was I fortunate to get amazing training, but I worked on some large brands like Tide, Ivory Snow, and Cascade. There was a saying among P&G brand people that you're there 2 years or 4 years or you're a lifer. So I was coming on my fourth year and I was the brand manager on Cascade, which was the market leader in Canada. And one of the strategies they asked me to do, which I ended up doing, was do North American rationalization of the production. So essentially moving it from Hamilton, Ontario, where it was being packaged, down to St. Louis. And they said, great strategy, Mitchell. Congratulations. Now you can follow the brand into the United States and we'll give you a job in Cincinnati, Ohio. And Cincinnati is an amazing place, I can't say I'm the biggest Reds or Bengals fan, but it is a great city. But when you're a single guy in your 20s, it's not on your top 20 list of places to go for a good time. So I didn't want to take that transfer. And basically, P&G at the time, they strongly encouraged you to follow along, and I really didn't want to do that. But at the same time, I had an opportunity to join a fledgling robotics company that was selling and integrating factory automation equipment in large semiconductor companies, automotive companies, packaging companies, and so on. So essentially, this company was looking for somebody who could read a balance sheet and a P&L and understand the basics of marketing. And I was enticed to join them when they were essentially a startup. And essentially what happened was we grew it to a point where we became the largest company of our type in Canada. And at that point, I had personal considerations where I just didn't have the time to devote myself 100% to my own venture. And I ended up selling my shares to the other two partners. And we had our first child. And so the timing was really great, but I was too bored. I guess I have a bit of ADHD. I was a little too bored. I wasn't sure what I was going to do. And I just started picking up consulting gigs. And at the end of the day, nice. I ended up building up a consulting practice that was focused on CPG, the pharmaceutical industry, financial services, and tech. And each one of those four industries really set me up in a way and prepared me for the challenge that is in cannabis, because as you can imagine, all four of those industries have a large role to play in terms of how cannabis business models are created, how the companies are run, where they get capital, and so on and so forth. So fortuitously, I got a lot of the key experiences and ingredients that has served me very well in the cannabis industry and allowed me to, serve my clients in the way that they need to be serviced.
Nice. No, it's interesting how those fit together because I would agree the cannabis industry, if I think of the supply chain, like I grew up in rural Wisconsin, it's like, well, it's an agricultural business with hardcore product manufacturing, with hardcore retail. And like, that's why it's funny when like MSOs, like you got to be good at all three of these. It's like some industries, like you can just be good at one thing. Like my dad owns a factory. It's like, he doesn't do anything with like industrial ramps. He just does industrial chrome, has a factory. You bring the parts, we use the machines, we give them back to you. But anyways, thinking through, so the cannabis industry, a common phrase that gets thrown around a lot, especially as the businesses get bigger and we try to implement just best practices, normal solutions that, well, this cannabis industry, it's different. It's new. It's coming out of regulatory. What we did at one industry or one traditional industry does not apply to this one. I kind of disagree with that as a CPA and like a compliant, person. Income statement still goes into your balance sheet. Balance sheet flows into cash flows. Like if you're not profitable, you won't be around. But I guess What lessons do you think cannabis leaders could learn from the traditional industry or some of these other like companies, just from the mindset of they always think they're special, they need to reinvent the wheel? But I guess like, what do you think some of these current cannabis industries could learn from their non-cannabis industry peers?
Well, okay, so I will admit a bias. I think cannabis is special only because I've been spending the last, almost 10 years fighting the CPG guys who think cannabis is just purely CPG and they ignore the
Yeah,
regulations and all. And then, at the same time, I'm fighting the pharma guys who think cannabis is only a medicine and they ignore the OGs. So
yeah.
I think cannabis is special, and I'm glad and I salute you for actually acknowledging that now, because that's not what a lot of people do. Having said that, you nailed it when you said, there are certain axioms and truisms and ways of thinking about cannabis which is no different than any other commercial enterprise, which is no different than capitalism. And accounting and basic corporate finance are two of those areas. So, as much as I think cannabis is unique and we have to think about it uniquely, it still needs to be run like a real business. Cash flow, profit, governance, reporting, and so on. So, those are I call a lot of that corporate hygiene. I don't think that's a fair term to describe accounting and corporate finance, but I think all of you get it. Like, we really have to think about this as a business, and a business within a capitalistic ecosystem, as opposed to a magic plant or a deity, which some people do, and they put it on a pedestal where the rest of the capitalistic world doesn't think or act like that. And that's our problem, because we're too inward looking often. We don't realize we're part of a system. And if we're part of a system, we have to be compliant with that system and speak the language of that system. And accounting, in terms of what you do, is one great example of that.
No, that makes a lot of sense. And I would agree it is unique because I always just remind people it's like, well, for me, it's unique in the sense of it's minimum, it's brand new. Like it's I live in America, it's federally illegal. Like it's just now coming out of it. So that alone puts it in a weird category like AI and tech. Like it was new, but it wasn't illegal. Like it's just new, where this is, coming out of all this other regulations. With that in mind, so we have Dope CFO certified advisor, you have Quanta Consulting, and we like hemmed and hawed at this, but thinking through consulting versus advisory, my question is just thinking of offering services. I'm just curious, this is a selfish question, but like how would you define the difference between offering consulting services versus advisory services? And then there's also this new one, fractional C-suite. Obviously, many people would consider us fractional CFOs. I tend to use that word because it's easily understood. Our founder, Andrew Hunziker, hates that word. He's like, we're not doing a fraction of the work. Like, we're still doing everything of this function, but we just do it for multiple companies. So just thinking through, like, how would you define the difference between consulting services versus advisory services? And no wrong answer. I'm just trying to
No,
think through
no.
this.
It's a great question. And I completely agree with Andrew, but I also see it on the other side. He's 100% right. We debase ourselves. And I call myself a fractional C-suite guy. So I didn't realize how much I'm debasing myself. But I think your question is an important question, but I think it's like angels dancing on the head of a pin in a sense, because I'm hired as a consultant, I'm hired as an advisor, and I do very often the exact same thing. And I really don't care what you call me.
Yeah, yeah.
At the end of the day, I'm client driven, and that's based on my clients' needs and the outcomes they want from their needs. So the actual business results. If it's easier for them to hire me as an advisor and call me that, great. A consultant also works, and a fractional leader also works, as long as I'm delivering the value that I promised to deliver, plus a little bit extra, because you always want to exceed expectations. That's great. And as long as I'm getting paid what I think what I deserve and concomitant with that value, I'm good. So in general, but I do want to answer your question. If I look at it as a continuum, the fractional leader is probably someone who spends more time in implementation and direct management of people and so on, more regular. When I'm a fractional person, I'm expected to show up for a certain number of hours and days and so on and join teams. I get that. A consultant is, when you move a little bit to the left or the right, that's often for me, fixed price, project based work that goes for an assumed
Okay.
amount of time that could involve implementation or may not. It depends on what the scope of work is. And an advisor, and I am an advisor, for me, it's typically, retainer based work. I'm there as sort of a pinch hitter to come in anytime they need it with any question. It's often a team or a C-suite person calling me up and saying, "Hey, let's brainstorm something," or "Look at this business case," or "Can you introduce me to somebody in the industry?" So it's less defined, it's less fixed fee, it's more being an advisor and a muse and a buddy than somebody who's actually working on a defined scope of work. But there's so many differences between all three of those things and similarities. It's hard for me to define myself one way.
No, that makes sense. I kind of think of it as almost like the scope of work and like a time frame where one is a one-off project, usually with a defined beginning and end deliverable, and one is kind of an undefined deliverable ongoing. And then yeah, when you get into fractional, it's like, nah, you're part of the team. Like they're gonna be there for things, they're gonna see you as them. No, that's really interesting. And I just kind of think it's cool because it's like it's evolving over time. Like I've worked at the other company, like they kind of roll their eyes when consultants would come in at JCI as like old non-cannabis one, but it's like I learned the most things from working with the consultants on there, like random, like, because we would like be making a bunch of sales, but we were not converting to cash. And so it's a $20 billion company, one company. So we're trying to figure out how do we do this? And then we'd have to bring in consultants. And then I don't know, they were always bring some fresh eyes too. But it was always a defined scope of work, or otherwise it would just go on forever. But what I liked about them is like they would always end their consulting engagement with like, we solved the problem, but like here's this other big problem we could also consult on. And then it would just like never end. Like once you solved this problem, you knew what the cause was, then you had to solve that cause. And I kind of thought it never ended. But anyways, I do like it.
Yeah, so I'll just go. So I get that reticence and skepticism in cannabis because there's a lot of cannabis consultants that don't know cannabis or don't understand the craft of consulting because just because you're smart, that doesn't mean you can be a good consultant. There is a craft there.
Yeah, skill set for
Yeah,
sure.
skill set. And the other thing is, like I find when I look at my work, around 2017, I was doing a lot of traditional type of consulting with PowerPoints and so on. When I fast forward to today, a lot of my revenues are on the integration and the implementation work. So, companies have skill shortages, they have headcount shortages. They want a consulting mindset and they want that innovative thinking, those best practices as you described, but they also want someone to do stuff. So that's why I like fractional because I love doing stuff, and at the end of the day, that's the need. So I define myself as either a problem solver for cannabis companies or someone who can help them capitalize on opportunities. A lot of the time, that's just on execution. Someone who's going to roll up their sleeves and do the work, but also transfer the skills and experiences to their team. So I used that term continuum very deliberately earlier because that's what it is. And I get the fact that a lot of people don't like consultants because I would say
Yeah.
three-fourths of them are jokers in our industry.
No, it is even kind of like outside the industry, but that makes a lot of sense. So I like the continuation. Like I got asked that recently of like if I come in and I set up the accounting and the workflows for the financial reporting and then I leave or something happens, like do we lose all that? And it's like, no, like I'm building it out. Like if somebody on your team is gonna have to help me do this, whether they continue to do it after I leave is, that's up to you and management.
Right.
But that's a good segue into my next question about just making decisions in some of these cannabis companies and misconceptions. And I'm asking this question because I know that you've worked with some of the larger companies. At Dope CFO, we predominantly work with, small to medium sized companies, realistically small companies, in that 1 to 20 million range is about, our bread and butter. We have some clients do north of that, many clients that are still in that pre-revenue build out phase in markets like Minnesota, for example.
Mhm.
But everybody thinks they could do better if they had raised more capital at the beginning. And so like my question is like, what are some of the biggest misconceptions entrepreneurs have about making decisions with capital? Just because everybody thinks if they had started with just a little bit more, they would be in a better place now. But I've just, I take a big look at the whole industry and I have friends in Canada and it's like, I've seen companies that raised plenty of money and had still not been able to hit that, because it's like a life cycle. Your pre-revenue, your post-revenue, you're profitable, and then you can scale. But some people can just never get their companies profitable, even if they scale it. It's just this big unprofitable mess. So, what are some misconceptions cannabis business owners have around making decisions with their capital or just getting started?
Well, it's an interesting question because, people in this industry, there's just so many armchair quarterbacks and people with 2020 hindsight. So,
Yeah.
like in the early days in Canada, like people were throwing money at you. And if you show them an investor deck and it didn't have a big enough greenhouse, they'd say, I'm not going to give you the money. You got to add 100, 200,000 square feet to that greenhouse. So literally at the time, the only way to raise more money is to have a more grandiose plan. People can turn back in hindsight and say, those original LPs like Canopy were stupid. No, they weren't stupid, because I've never met a business owner who didn't want to take more money than somebody offered at a high valuation. So one misconception at the time is that we know how much money we need. You never know. There's never enough. And there is some dignity in being poor, but you ask most poor people if they'd rather be rich, and they would. Like, let's be honest. So
Yeah.
the issue is that the focus isn't on how much money you're raising, it's what you do with the money.
Yeah.
And how that money translates into assets or capabilities or brands that will allow you to achieve your financial goals. So my criticism of Canadian, US, now German companies isn't how much money they're raising and at what valuation. It's what they're doing with the money. Are they allocating it properly? Do they have the right execution team? Are they building based on the right corporate strategy? Like in Canada, everybody wanted to become the low-cost producer or the biggest brand. Well, it's like a traffic jam, right? You were basically building into a competitor set where you were guaranteed to have tons of competition. Nobody was going after niches, or very few people. Nobody was focusing on one or two provinces. They were all chasing the unicorn. And that was a guarantee to have strategic confusion, overcapacity, undifferentiated brands. So the failing around capital isn't how much you get and how much you should get. It's what do you do with it, and how do you allocate it to the opportunities or the strategic lanes where you could win. And that one problem has plagued every cannabis industry I've ever seen in every market.
No, I appreciate the way you broke that down, because it's kind of what I've been slowly learning over the, because I'm still learning a lot. And I'm like, no, it's not how much you raise, it's how you spend it. Because again, like if you raise this much, but you build a facility that's this much, it's like your operating capital's gonna be shit. But if you raise this much, you build something here, it's like you got some runway. And the industry just changes so damn fast. You almost need to be in the game long enough to see what happens to like
Correct.
then take a shot. You're like, all right, now I can make a
Correct.
move.
Correct.
Um, God, I think like a wrestling match almost. It's like you don't want to just shoot right away. Let's feel the opponents out, because there was so much of that first mover advantage, especially in the States, because like state by state would open up. And so every time there was a new state, it got to be a playbook. It's like, okay, who's going to get the licenses? Cool. Let's start getting the capital, secure the real estate. The capital and the real estate kind of go hand in hand. Easier to get the capital once the license is secured. And then that kind of flipped, where then the licenses were like pretty easy to get and capital was very hard to get. And so then it was like, okay, how can we open up into these new markets? And then that's when I kind of started to be like, well, let's just make our current footprint profitable. And yeah, caveat everything we say, we're not armchair quarterbacks. We're out there trying to help these companies from the accounting and finance and ops side. But it is interesting. There was a bit of hubris. But I feel like that's kind of self-corrected itself quite a bit. But thinking through just like yeah, making decisions, and now thinking through speed of decisions. So that's another thing where yes, you don't want to make decisions too quickly, but I've also seen sometimes that are kind of interesting. And these are maybe for the larger companies with more capital, but like people see things happening, but then only a few companies make decisions quickly to position themselves to take advantage of it. Example being UK and EU opening up for global medical cannabis exports. Some Canadian companies took advantage of it very early, and we have some that are just still now figuring out, like, wait, what is GACP? What is EU GMP? Should I take this serious? So I guess what's the difference between the companies that like see something where they're like, okay, that actually might be a good use of our capital, let's deploy and move, versus the ones that are like, let's wait and see? Like, how do you kind of think through that decision of like, when should you move and when should you chill? Just thinking through like, yeah, like the EU opportunity that many Canadian LPs are taking advantage of, but many are not.
Right. So, great question. So I had a front row seat to a lot of that because I've helped some of my clients design and build their EU and Australian supply chains to penetrate those markets, and this has been going on for years. Um, I will say not of my clients, but of some of the companies that have been successful. It's been a combination of two factors. One is pure luck, right?
Okay. Yeah. Yep.
Like somebody was small and they said, what the heck? Germany legalized. Why don't we try and sell it? They met the right person. And before you know it, they've got a nice business in Germany. And that's number one. The other one could be, they had excess inventory and, and this one's been a bit of a misconception that, a lot of Americans and some Canadians think, oh, Canada was just sitting on billions of grams and we had to get rid of it. So let's dump it into a foreign market. But, cannabis, degrades over time. By the time they figured
Yeah.
out the supply, like it was gone. That old inventory overhang, big chunk of that was written off and it never got shipped anywhere. So, that wasn't the reason. But I think part of it is, at least my clients, and I'm giving you an insight into how I thought about this. We looked at our capacity and our potential production. We looked at our brands. We looked at what kind of regulatory horsepower, compliance horsepower we had in our firm. We looked at, could we become EU GMP certified in a reasonable amount of time? Reasonable amount of time is like 2 to 4 years for that, by the way.
Yeah.
And we said, we could probably make a pretty good bet based on, let's say, 50% of pharmacy prices in Germany at that particular time. So it was always going to be a long-term play. We didn't bet the farm on it. No one took their eyes off the domestic business. And before you know it, that market actually exploded a lot more than a lot of people thought. And those that did the initial homework up front and spent a year, maybe 2 years putting the pieces in place, reaped the benefits. So it's a combination, to sum up, of strategic foresight, which I thankfully was a part of, pure luck, and number three, I would probably say a demand pull from Germany or Australia of them coming to Canadian LPs and saying, hey, we need product. And those guys willing to buy almost anything because their consumers were demanding almost anything. So in that particular case, imagine a German reseller knocking on your door and saying, we'll take 100 kilograms a month, and you've got that product right there, and you know that you can make 90% gross profit on it. Of course, you're going to do it, right? So it will be very different for my American brothers and sisters and other Canadian LPs and Australians to start tapping into that, because the market's way more competitive in 2026 than it was in 2023, 2024.
No, that's fair. I mean, I remember when it was nice in 2018 to 2021, and it's like the market's gotten a lot more competitive since then. So I was like, I've just grown up in this competitive market. But to your point, it's not going to be as easy as it was even 4 years ago. Especially, I started going to Europe, London, and Berlin 3 years ago. So this will be my fourth year coming up here, and yeah, I was like the sole American there, and I was just going there to support, my friend at the time who was a Canadian in the industry, and so and then I went there this last year, just recently to ICBC, and oh man, it was tons of Americans there. So it's very interesting. We're like that is switching, but to your point, it's going to be a grind, but it's not impossible. It's all just setting up supply chains. Not just, but it takes time. It takes years. But if you know how to set up supply chains, because like not everybody's seen global business before, but I know you worked for a global business. I worked for a global business. Like when you grew up in that world, you're like, yeah, it makes sense. Like you can get your products and your labor fairly cheaper in one market, get it manufactured, sell it for a much larger markup in this market, just because of the exchange rate, let alone they're just willing to pay more. And so I'm like, yeah, makes sense. Cannabis would do the same thing. Like, why do we just got in this weird bad habits of like, no, you got to produce and sell within one market. It's like, no, you have to. But I guess just thinking through, just because candidly, people will try to break into the global supply chains and get into new markets. What would be some of the advice? Because that's kind of my lead into my next question, because we are going through some change here in the US of A with this federal, regulation from S1 to S3. So it's just inevitably people are going to make plays. So for people who are either have the capital or don't, how would you advise them to start thinking through because we get questions like that too, and I always tell them like, "Hey, are you profitable where you're at? Are you selling? How quickly are you turning over inventory here? Because if we want to ship it over there, that's going to make cash flow cycles longer. They're not going to pay us quicker. And it's going to be usually a larger order because we got to do stuff. So, with all that in mind, how would you advise people who are like coming to you like, "Hey, Mitch, now I'm thinking about going, yeah, like a U.S. Canadian or U.S. company being like, hey, Mitch, I'm thinking about either exporting to Canada, Europe, or EU. What would you suggest?"
So I do a lot of work around exports, and I mentioned that earlier. And since S3 came out and the potential DEA waivers on exports, all of a sudden the level of activity from my American friends have shot up. And I'll tell you what I tell them. For Canada, it's a no-brainer. We're a mature market now on adult use, so we're growing 5 to 10% per year. We've got huge capacity. We need a place to send our product. And if you don't look globally, like you're in trouble in Canada. The US is different. So the first thing I sit down with my American friends is I'll say, let me see your strategic plan. Half of them will have one kind of, and the other half won't. But what I'm trying to do is trigger a strategic conversation. So as soon as they start, putting the foot on the gas for international because they see what Glasshouse is trying to do and others, Curaleaf, I say, wait a second here. How does Europe or Australia compare to Virginia when that fully opens, or Texas? International is just one of the potential strategic growth avenues for you. And for a lot of Canadian companies, I'm not sure it's more than 10 to 15% of their total revenue. And that's in Canada, which is roughly a $5 billion US market. So for some Americans, I say, don't even waste your time, because when Texas opens, it's going to be massive. Virginia will be huge. There's still a lot of growth in places like New York and Florida. So I literally talk them out of thinking about export, because they have way better growth opportunities closer to home where they don't have to create the supply chains that you're talking about, right? For others, then if it still looks like it makes sense, we do your classic IRR, return on investment, net present value kind of analysis. And we say, okay, what's the size of the prize? How much can we expect you to get? The world, believe it or not, I know some of your listeners or viewers from California are going to hate me for this, but I love California. And the world's not waiting for California cannabis, okay? They're not. They're waiting for U.S. brands and California brands, but you could slap a California brand on cannabis grown in Missouri. And I've written about this, right? So my American friends have to be a little bit careful in terms of, what can they offer to the market that the market's no longer getting, and how do they do it? So if you're asking me what's the smartest play, because I think you were driving towards that, if I'm an American company, I have capital, I want to buy a Canadian LP that's already exporting into Europe, that's already got mind share, it's already got reseller relationships, it's figured out the supply chain, it can grow quality flower and ship it over there. That's the easiest, quickest way to profit. Of course, you can build it yourself and you can get EU GMP, and I've said this publicly, so I'm not lying, you're looking at anywhere from 3 to 5 years to make that happen, and a lot of capital.
No, that makes a lot of sense, man. It is I always joke about the cannabis industry, as I feel like it always has a flavor of the month, and I've never seen things become more exciting and less exciting faster than almost the
Right.
cannabis industry. I guess just the news is one thing, but yeah, because that is an interesting thing. Because as I started going to Europe, and I'd always tease my girlfriend, I'm just like, well, yeah, it's cool, but the UK is like 500 million. Germany at the time is like less than a billion. Like, we just opened Ohio. Ohio's
Correct.
already like a multi-billion-dollar market.
Correct.
Pennsylvania is a billion-dollar medical market. Same with the Florida and Texas. And so in my mind, that's how I kind of look at the map, because we're trying to open up offices in key markets. And so it's like, it's a CPG product at the end of the day. So we like the East Coast. So the way it worked out is like Dope CFO started in Oregon. We have one other teammate in California and myself, but predominantly all of our teammates are east of the Mississippi, because that's where like a lot of the city centers are and a lot of the new markets are opening up. And so, no, I totally agree with you, where it's like, before we get super excited about exporting, like, let's just try to win interstate commerce, because there's a lot
Right.
of key cities and markets nearby where it's like you can just get your product over there. Because we've even seen like some of our most successful clients, like they're not the large MSOs, they're multi-location, single state operators where like they usually started really good at retail and then just kind of moved backwards into cultivation over the few years to like get their own, house brand more profitable, or vice versa. We're cultivating hardcore and then they needed to get their own stores to get some like reciprocity, but it's usually in one market. And so no, it is interesting with the hype of going abroad, but it's like before you do that, it might actually make sense. And I guess that's another picture that I wanted to bring up too to my audience is a lot of our audience are small or mom and pops, but also just, smaller operators. But if you came from companies that own portfolios of companies, like I'm sure you did at Procter and Gamble, I did at my own company, it's like, well, you don't build a company to get into a market. You just figure out who are the top five and then you go and buy them. And then you get access to all of their supply chains, all their IP, decades of like goodwill and in the community. And like you don't even need to change their brand. If anything, we want to keep it the same. So I
Right.
think cannabis is kind of going to get there. We're graduating to that level. And I think the New York Stock Exchange allowing some of these companies to uplist and all of that, it's like it's going to become more normal where I feel like cannabis, we were just so used to starting these cannabis companies from scratch. And it's like that's definitely still going to happen, but overall it'll probably be more people buying them. And selfishly on that kind of note, thinking through some of the larger non-cannabis entities that have made plays, Constellation Brands, Samuel Adams, there's even the Paps Labs. What do you think is the strategy of some of the larger companies outside of cannabis that are looking at it? Like, is it on their radar? Obviously, some of them are, or else they wouldn't be investing on it. Is it too small for some of them? Because I know there's just always this fear of like, at least in the United States, of like, well, once it's federally legal, big alcohol or big pharmacy or just big business will move in. So I guess from your perspective, how does big business look at the cannabis industry?
Okay, so I will answer your question. First, I'm going to say, the smaller operators and the single state operators you talked about, the 1 to 20 million, I actually think they're best positioned to grow and in certain cases to dominate. And the Canadian market experience has shown that. So if you want to revisit that at the end and we can speak to your specific audience, I'm happy to do that and talk about our history here. But to the
Yes.
question you just asked, again, it's one of those topics where so many pundits in cannabis will opine about how big pharma or big CPG or big tobacco are going to enter this industry in a greater way than they already have right now. And the truth is, all of them talk shit because they're not there. They're not at the boards. They're not in the strategy planning groups and so on. They just don't know. I've worked a little bit in beverage alcohol and big pharma on the strategy side. So I understand a little bit of how these guys operate. So at the risk of boring your audience about the nuances of every particular industry, I'll give some general overview concepts. So number one, those firms have been in cannabis and by and large, they've been burnt. The best example of that was Constellation when they put 2.5 billion into Canopy. So if you look at their experiences of big anything in cannabis, it's been at best neutral, and it's only was neutral because you might think they got some learnings on the industry and so on. But at worst or realistically, it sucked. So right off the bat, and I know people in those sectors, and I've done cannabis work for them, they don't look at cannabis in a very favorable way. They know it's going to be huge. They know that there might be some replacement of alcohol, for example, with cannabis. They get that. They don't know how much. And they see a lot of stigma and they see a lot of regulatory uncertainty, but they're not lining up to invest in our business anymore.
Yeah.
That's a fact. Okay. Fact number two, and you would know this, when you're like the size of Procter and Gamble, you're planning at least 1 year in advance in terms of how you're allocating capital. So if I'm doing my business planning and I'm on a July 1 to June 30 year end, I've already set my capital budgets for that whole year. I'm not pulling the trigger on cannabis until the next fiscal year. So the realities of the way these companies allocate capital and develop strategies, they either catch the wave in cannabis or they don't. So there's going to be no run to the entrances of these companies because if it's not baked in now, it's not happening. for at least a
No,
while. The
for sure.
reason why,
Even the due diligence process alone, it's
correct,
like they don't just make
correct,
quick decisions because they
correct.
don't have to. They're the big
They don't
bank.
have to because they have balance sheets where look at Procter and Gamble. I haven't looked lately, but they can buy the entire North American cannabis industry by themselves. And they bought Gillette, I think, for like, I don't quote me on this, 20 billion or whatever. Like they can buy our entire industry for that. They're in no hurry, and they know that whenever they decide to make a move, they can pay any price and get the best company they want to get. So they're not in a rush. And number four, last but certainly not least, for some of the sectors like beverage alcohol, they want to see more regulatory clarity. So if I'm in beverage alcohol, I care a lot about interstate and how the cannabis supply chain is going to be regulated, because I want it regulated as close as possible to the beverage alcohol market. And right now it is not. So they are lobbying, they're working behind the scenes to influence it. But until they get almost 100% certainty on this is what it's going to be, right? They're not going to make an investment on that. Why would they, right? You might, one caveat to everything I'm going to say, you might see more pharma companies jump in with S3 because all of a sudden you have a lot of cannabis companies that are essentially become FDA compliant pharmaceutical companies. That has a lot of similarities to what an actual pharmaceutical company is. So you could see it for sure on the medical side once we get S3, but we have to get S3.
Yeah, and that's a whole nother conversation that
Right.
I'm not. Fool me once, shame on me. Fool me twice. So I try to keep my head down with this regulatory things. I used to get excited of like, oh, they're gonna have federal reform, but I just kind of just wait for the ball to drop on that. But you made a very good point, and I think it is like the magnitudes of difference in some of these companies of like, because there is a bit of a fear of like if we legalize, it's all just going to be owned by these larger companies. And yeah, to your point, I'm like, well, you're not even worth their time. Like they got to do this whole bigger thing. There's only so many people in the United States that even consume this product. Whereas like, everybody needs to do their laundry and like brush their teeth and shave. So it's like just a much more larger market. But let's circle back on the smaller operators because that is who I deal with. And I would say, the vast majority of the market is companies doing less than 20 million in top line sales, despite the headlines and like the absolute number of cannabis companies like licensed operators probably doing less than 20 million top line sales, north of one. But I guess for those companies that want to be around, they're still want to be a going concern in 5 to 10 years. Maybe they're profitable, maybe they're break even, but they're still in the game and they've learned some stuff. So we'll assume they're profitable. How do they position themselves for the next 1 to 5 years to take advantage of these changing markets and changing capital, markets?
Okay, so it's a great question. So and I'm going to go back to my history now. I think I told you my first project was for 30 medical licensed producers that
Yeah.
all became public. So the types of engagements that I've done started off with the biggest companies, and over time, it has migrated down to I would say 5 to 25, $5 to $50 million companies for a major reason. One is, at least in Canada, and you see this a little bit in the United States, the larger companies lose share to smaller companies. Okay, that's number one. So if I like working with rapidly growing, innovative companies, those are the smaller ones. So right off the bat. So the big ones who try and be all things to all people are losing share, not profitable, and so on, and declining. And the little ones are going up. Okay, that's number one. Number two is the little ones are going up because they haven't had the luxury or the curse of having so much money. When you have so much money, you spend it everywhere. To your point earlier, you build out capacity, you build out retail, you build out product portfolios. You're basically competing everywhere and not competing anywhere well. When you're smaller and you have less capital and less talent, you tend to be way better in terms of putting all your eggs in one or two baskets because you don't have a lot of eggs to begin with. And number two, you become much better at what you're doing. So these smaller companies, because they can focus strategically, because they have less money, so they can be more efficient and frugal with their capital, tend to drive higher return on invested capital, higher ROI, better cash flows, if they're managing their businesses properly than the bigger firms. So paradoxically, as you know, in a lot of industries, big is healthier and big is more stable and big is more profitable. In cannabis, according to my research, that's not the case. In many cases, it flips. So those 5, 10, 20, $30 million companies that I see are often the healthiest, the smartest, and there are companies that people are throwing capital at, but they're not taking it for obvious reasons. So it's a great place. So what I would suggest to them is, one, engage with people like you to make sure their cash management, their reporting, all of that stuff is buttoned down. This is like capitalism 101. We spoke about that, right? And I can't minimize that enough, because if they have a good financial picture of what's going on, they could do a little bit of planning. They watch their cash flows. Their accounts receivable aren't crazy because they're running a tight ship. Right off the bat, they're going to be better than most of their peers. Number two is focus. Pick a lane, either by product or by region or something, by corporate strategy, and go deep into it. And then once you've done exceptionally well, then you could start expanding horizontally. But there's so much growth in certain high velocity markets like edibles and rosins and concentrates. You could do very, very well for yourself, because the big players, they're like Germany in World War II. They're fighting on every front. They're not in one particular place, right? And number three is that these businesses are way easier to control and manage than a multi-state operator that's like has Swiss cheese operations everywhere. So with dedicated, passionate management and the right team who knows how to execute, that $20 million company can be a $50 million company in a year. And at that point, they're going to have a lot more capital, debt and equity thrown at it. Number two, they're going to have way more M&A and opportunities that they can take advantage of, because their peers are fading by the wayside.
No, I appreciate that breakdown. And it's honestly, it's a good reminder even for us at DCCA. Like, we kind of have a similar philosophy of just like, well, if you focus on one product to one, customer for one industry, like, you'll probably get better at it than if you're trying to do a couple of different products or services. And then even just like competing, and like I said, it's like I kind of think of it as three distinct industries of like agriculture is its own industry, but we definitely do that in cannabis. CPG is kind of its own, thing, and then same with retail. And if anybody knows, when you're competing, you can lose. 4 out of 5, companies that, depending on the stats you look at, like, are out of business in 5 years. So if you pick 3 different, lanes to compete in all at once, it's like you almost increase your chances of failure. Where it's like if you just do cultivation and you just focus on getting your cost per gram to like where it works, you have a higher likelihood of success. Now, this has been a pleasure, Mitch. I could chat with you all day, but I guess just, final question, get you out of here. Just where are you going to be the rest of 2026 and early 2027? Where can people find you, and what has you excited?
I'm going to be where I've always been, based out of Toronto, but all over the world, servicing my clients, rolling on my sleeves. And then, as I said, doing some strategy and planning and so on, but also helping them execute, getting into new markets, connecting them with symbiotic partners and so on. So Toronto is a great base, certainly for Canadian cannabis, but I'm able to, fortunately, tap into some new markets in the United States that are growing quickly, like New York, as you would know, in Ohio. That's not far from where I am. Where people can find me, I'm quite active posting on LinkedIn. You can find me there. If you're not connected with me, please go ahead. I also publish a blog. It's called the Cannabis Management Review. It's free. You can find that's on Substack. I post a couple times a week, best practices, management tips, and so on for cannabis. But what I try and do is use best practices from other companies and other industries, as well as what I think is unique research. One area I focus a lot on is decision-making and bias in decision-making. How do cannabis people make decisions? That's a whole important subject, because we don't always make them the same way that other industries do, to our detriment, without the rigor and so on. So I write a little bit about that as well, but I'm always happy to have a chat with anybody, no obligation. I never put the taxi meter on initially. It's all about relationships and trust. And I focus on that in all my work and in my outreach in the community.
Awesome, awesome. Well, thank you so much for your time, Mitch. I always get value from your conversations and your insight, and so appreciate you. We'll talk soon.
Thanks, Ray. All the best. Take care.